Hello everyone and welcome back to the Option Writer. What we wanted to do on this video is go over our August portfolio income. We had a great month in August, a return of 3.42%. Again, great return for August, right in line with our expectations. And our calls in the options market. Now, before I get into all of the positions and kind of run through how we entered our positions and where we positioned ourselves for this great month, I wanted to go over a chart real quick of the S&P 500 just to kind of give a little perspective on where we've come over the last couple days and where we might be headed. So here's a chart of the S&P. As you can see, it's a daily chart, and you can see the main thing that I've drawn here on this chart is this massive trend line that we recently broke back in the beginning of August with that one huge down day that we had back around the 9th of August. Now, that's a pretty important trend line, and not only is it important for resistance, but it also happens to be the same area that corresponds with a major Fibonacci level here in blue, this blue horizontal line right around 1,120. So I think that for the remainder of August, we're going to be heading marginally lower. I don't really see us getting back down to the low 1,000 area, 1,010, 1,020 anytime soon. But I do think that we're going to be starting to trend lower, a little up day, a little down day here and there. Overall, heading lower right around 1050 is where I think the market's going to be going. Now, as you remember, that's right where the area was for options expiration, is right around 1050. So we didn't quite make it down there. We came close on Friday. Midday during the sell-off, but we didn't make it down to 1050, and that's okay because, again, that's not a set-in-stone type of indicator. It's just another guideline or another reference for you. Now, if you look towards September option open interest, and we'll be posting a chart about that later this week, so check back on that. But September open interest for options is actually a little bit higher than where we are here. Now, that doesn't mean that we're going to go down and then jump back up. It also could mean that we could just stay flat where we are into the end of September. So actually open interest again is higher for September. So again, we'll check that out later on this week. Now what we want to do is go over all the positions that we had for the August portfolio. The first one we had is on IWM, and we had 40 puts. So you can see I've drawn the strike price level here in red for all of our positions. We had 40 puts on the IWM, so you can see that it was well below the market. Great return on these puts. And you can see once again that our strategy is really the only strategy out there where you can get this far away from the market and still make a great return. The only possible way ever that we could have lost money on this trade is if the market and IWM got down and closed below 40. Now we entered this trade with about 60 days to go, and really historically speaking there's a slight chance that that could ever happen, about less than 2% chance that that would ever happen. You can see the market stayed safely above all of our puts. Moving on to the Qs, we had a 30 strike put. Again, the same type of idea happens. We were well below the market. We distance ourselves from the market, stay very conservative, and if the market doesn't close below our strike price, then we make all of our money like we did this month. And finally on the SPY, we had two positions on the SPY, a 75 strike put and a 70 strike put. And you can see that both of these puts, the 75 and the 70, were down near the lows of 2009. So you have to understand the market would basically have to crash in 60 days or less for us to lose any money whatsoever. And the likelihood that that's going to happen these days is pretty much slim to none. It's basically free money that's out there for you. So as always, we hope you guys enjoyed this, and happy trading.